Live yet?
1 minute.
Okay.
Just setting up the meeting. Yes.
Okay. Well, welcome to the virtual meeting of the Audit Committee of Northamptonshire County Council. It's a virtual meeting and is also being broadcast simultaneously on the Council's YouTube channel. My name is Bill Jessup and I am the Independent Chairman of the Audit Committee. First, some housekeeping. Before we start, please could everybody ensure that mobile phones are silent. Please keep your microphone muted when not speaking and then obviously unmute to speak. Please only one person to speak at a time, and I, as chairman, will call those to speak and keep an eye on the room through my gallery view to see who's waving the little yellow hand. So we have to start with an attendance roll call, so let's do that first. So Councillor Irving Swift.
Present, and please record the apology of Stephen Osborne, which he asked me to do. Thank you.
We'll do that. Apologies. The apologies. So Councillor Stephen Legg.
Present.
Councillor Bob Scott.
Substituting for Councillor McGee.
Yeah, thank you. And Councillor Bill Parker.
Present. Okay,
so in terms of technical control of the meeting, if any councillor leaves part way through for a period of time, then the meeting will continue unless we're not quorate. The quorate's generally 3, but I'm advised could be 2. If the meeting becomes inquorate, then it'll continue as a briefing session for those members still present. And during that period, no formal decisions or recommendations can or will be taken. So first of all, on apologies, we've obviously got apologies to record from Councillor Osborne and from Councillor John McGee with Bob Scott in his place for today. Can I just ask Democratic Services if any members of the public have indicated a wish to speak?
No.
Thank you. And can I just ask council members, committee members, if there are any declarations of interest to make?
Yes, Chair. I think I may have to declare an interest in that I am the Deputy Chair of the Northamptonshire Local Pensions Fund, which is obviously an item 9. I'm not sure if I need to do that, but I think it's important to do so.
Yeah, I think it's best for the record. I think, Councillor Legg, I think you're also on the Pensions Committee, if I remember correctly.
That is correct. I've not declared it before, but certainly I am a member of the Pension Committee, yeah.
Yeah, and I'm advised that you can both participate in the discussion and you can vote on the relevant motion.
I'm also a member of the Pensions Committee and the Investment Subcommittee.
Oh, yeah. Thanks, Bob. Good, so we'll record those. I have no announcements to make other than I'm going to slightly vary the order in which we take the items on the agenda. I'm going to take items 7 and 9 together because they both relate to the year 1819, and then I'll do item 8, which relates to later years after that. So let's move on to the minutes. Have we got any comments or questions in relation to minutes? Good, I thought a good record. Are members happy to approve the minutes, please?
Agreed.
Good, thank you. I think we can take that, the minutes are agreed. So let's get into the meat of the meeting, and I'd like to introduce Janet Dawson, who's stepped in to replace Stephen Clark, who unfortunately became ill. So has had to work very hard to get up to speed in an extremely short period of time. Janet, I'll leave it to you to progress through your report, but what I thought would be a good idea is if we pause at the end of your section 4 for any questions that we might have, because that's where we're dealing with the statement of accounts, and then we can go on to look at the value for money issue so that we can have those discussions as distinct items. I think that would be helpful. So over to you, please, to take us through your report.
Thanks very much, Bill. Hello, everybody. As Bill has explained, I've stepped in to take over from Steve Clark. However, I am ably assisted by Debbie, who has kept the show on the road all the way through with the team. So don't be alarmed at a last-minute change, because we've been working very closely together over the last 2 months on this. So I had planned to take you through the headlines of our report and then take you into, and then hand over to Debbie to talk about the areas that are still ongoing, the actions that are required, and the timescales to complete that, and then take questions afterwards. But as Bill has suggested, perhaps we take each section, and then I'll hand over to Debbie at an appropriate stage. But before I get into the detail of the report, it sets out the findings of the work that we've done for the 18-19 accounts. So we have to take our minds back 2 years now. And I think just as context for why it's coming at this point, you know, it was our first year of appointment as the external auditors. And as a view of the organisation that we were stepping into and the audit that we were going to undertake, we assessed this as a high risk engagement by the firm, given the circumstances of the authority prior to our appointment. And that has required us to go through, you know, an almost forensic view of what's in the accounts, how they've been put together, all of the judgments, estimates, etc., that management had taken in 18-19 and have been looked at by the management team in place now as we've been going through this audit. So we did have a delayed start, and then we have found significant issues in the progress of our work. But what I would like to say is that, you know, having had a reset from our side in terms of our team, and also from the finance team within NCC, we've had a very strong, effective joint working process. And here we are now at the very final stages of that audit. There has been a significant amount of work that's been done on both sides, and I would just like to record now our thanks to the finance team and the close down team, who have worked extremely hard with us to get to this point, and they have done incredibly well to cover the ground with us. So in terms of our executive summary, we are in the final stages. As I say, we've got some final areas to close out. We do expect to issue an unqualified audit opinion, which will include a paragraph to emphasise the disclosures in the accounts regarding the demise of the organisation and the creation of the new bodies. The key areas of audit risk and focus are set out in the document in section 2, and I don't propose to take you through those in a lot of detail, but there are a significant number of areas where we did a lot of work, and we're more than happy to take questions on those. However, I'm not going to take you through each of those because there are, as I say, a significant number of those. As Bill has alluded to, I'll just touch on our proposed conclusion for the value for money conclusion, where we're required to look at the arrangements in place in the organisation during the year under audit. So we're going back 2 years into 18-19, and we had identified 4 key areas of risk there. And whilst we can recognise that significant improvements were underway in 18-19, we have identified that those weaknesses were still evident in a number of areas, and therefore we will provide a conclusion which says we are unable to conclude that the arrangements were in place throughout that year. And then the final area, before I hand over to Debbie, is that you'll note that there are a number of control recommendations that we set out in our report, and clearly those will be important for the new organisation to take forward, and again we're happy to take any questions on those. If I hand over to Debbie now, and perhaps she can just talk about the areas that are still ongoing and the actions that are required across those.
Would you like me to take through and discuss the differences as well, Janet, as part of that?
Yes, please.
Yeah. Okay. If I do the differences first, and then we'll come on to sort of where we are and what needs to be done. So page 35 of the report sets out the differences we've identified into 2 main categories. So first of all, we note the adjusted differences, and I think what you'll also see within your pack is I think officers have produced a very helpful summary which shows the sort of draft accounts and then the amended accounts and the changes that have gone through for some of those. So we are highlighting in here some of the key adjustments that have come from the audit. But I think if you look at that schedule, you'll see that there's a number of other changes have gone through the accounts as well as part of this process. We've categorised the changes that have been identified and amended into a few main areas. So the first ones are related to mainly property, plant and equipment. Not an area where it's uncommon for us to find differences. So it's an area where we quite often find difficulties in local authority accounts, and we've highlighted there a number of specific areas that have been amended in the updated financial statements. We've also identified some areas that impact on the balance sheet but don't have any impact on the CIS. So one's just a reclassification between short and long-term debtors, and the other one was a bank account balance that was omitted from the draft statements. And then we've also identified a number of disclosure errors that have been corrected in the financial statements. A number of the changes in property, plant and equipment that are identified flow through into some other areas of the account, so the capital adjustment account, revaluation reserve, and also capital financing requirements. So again, those changes have flowed through into a number of different areas within the financial statements. So if I then take you on to the unadjusted differences, which are actually fairly small in number. So I think, we would commend management on pretty much putting through most of the differences we've identified. You'll note on here that we've identified our differences between projected and judgmental. So these means that either for the projected ones, we identified some errors in our sample testing. And what we then do is we consider the potential impacts of those errors on the rest of the population that we haven't tested. So we calculate a projected difference. So on there, we've got basically some creditors that shouldn't have been included in the accounts because they'd already been paid. And then also some assets where existence could not be verified. These were mainly vehicles, plants and equipment. And so we've calculated, again, an extrapolation in relation to those assets. And then the final one we've noted on here is in relation to the pension fund net assets. This is very much due to a timing difference. So the accounts prepared on the basis of an IAS 19 report provided by the actuary, which includes an estimate for the pension fund assets. We then look at what the actual assets are at year end and calculate what impact that would have on some of the figures in those disclosures. So it's very much based on the timing of production of the accounts and estimates. Then at the bottom of the page, you'll just note that we've identified 3 further unadjusted differences, but these actually don't impact on the final reserves position of the council at the balance sheet date. So we haven't put them in the table above, but have just noted them. And that's primarily because they're in effect, One Angel Square has in effect moved out of the accounts now and been treated in a different way. So we have noted those for information, but they have no impact on the actual usable reserves. If I then take you through the position on where we are, so members of the committee will note that on page 5 of the report, we listed a number of areas of work that were outstanding at the date of drafting, so last Friday. Really pleased to note that pretty much all of those have now been completed, with the exception of a couple of areas. So if I just flag the areas that we're still working on. We received an updated cash flow statement over the weekend, and then another version on Monday, because originally there was a material unbalanced item on the cash flow statement. A lot of work has gone into resolving that issue, and we now have a cash flow statement that is balanced. I think we've got a few queries which we've been sending back to officers earlier today. So we are still doing some work on that area, but I think we're comfortable now that that significant issue has been addressed. We also need to review an updated financial instruments note. Again, we received a set of accounts, I think version 5, if I'm correct, just before this audit committee. So we're now checking through that version of accounts. We can see that there is an updated financial instruments note in there. Obviously, we now need to do our procedures to check that that's in line with our expectations. But then the really key area that we're still working on is the prior year adjustment, which has been reflected in the accounts which are in your pack today, in relation to both the private finance initiative accounting and also the MRP calculation and policy. That's a significant issue. We are comfortable with the PFI adjustment. We understand that, and I think we're all in agreement that that's a PYA. We do, however, need to go through internal consultation procedures around that PYA and the link to the MRP adjustment that's been put through. And the council has sought legal advice on that matter, and we've also sought legal advice in relation to that. We're working on that as quickly as we can, and we're hoping to be able to consult on that internally later today. But obviously that is a key issue, and we can't at this stage say what the outcome of that consultation will be in terms of whether it's accepted that that's a reasonable and appropriate prior year adjustment to be making in the financial statements. So I think that where that leaves us in terms of a way forwards is we're clearly still closing down the audit. I think a huge amount of progress has been made, not just in the last months, but I think particularly the last week. You know, where we are now compared with where we were to 5-6 days ago. You know, this does feel achievable now, I think, subject to, as I said, the PYA on the MRP. So I think in terms of, we'll all be continuing to work on this for the rest of today and tomorrow to try to close everything down. I guess the decision for the committee is your decisions, and I think you've been given 2 options on either approving the accounts and the letter of representation today, or delegating that authority to the Director of Finance and Bill as the chair of the committee to make those final approvals once we've completed all of our audit procedures and the final check of the financial statements. So I guess I'll probably leave it there unless Janet wants to add anything to that.
Bill, can I just ask a question, please?
Yeah, of course.
You mentioned obviously about the MRP and PFI, and you were talking about, particularly with regards to the MRP, that you would be carrying on talking about it later today and tomorrow, hopefully tomorrow. What happens if you don't actually succeed in closing it down by the 31st? What
We're not in a
impact will that
position.
have on the new unitaries?
So then we wouldn't be in a position to issue our opinion by that date, and then I think again you've got in your paper some options for that scenario.
Yeah, so my understanding, Bill, is that it would roll forward to the West to deal with, and of course then you get the added complications of having to refresh the going concern and so on and so forth. So, you know, if we can get there, I'm sure everybody is very highly motivated to do that. Cecile, you've got a question?
Yes, first, thank you for your summary. And we understand that everybody has worked very hard on this issue. That is not a problem. We are a committee, we have to do our job. You didn't make our job easy. I don't think, because as you know, it's a very complex situation. So we want to do our job properly as committee, but I am not an accountant like you, nor like Barry. So it's very difficult for us to have enough insurance to say yay or nay. We have to rely on you both to have your professional opinion. But as far as I'm concerned, I would like the committee or in the minutes that it's noted that we didn't have enough time as part of the audit committee to digest, and we understand why. But also we go to different positions, and I can see on the web cast we have our commissioner, and can we not leave that to the commissioner to delegate the power? So like that, I am completely exonerated if I take a wrong decision. My position is, I want to back you all, but with the knowledge that I do the right thing. At the moment, I am not in a position to, because it's very complex. I mean, you have QC working on it. You have been working flat out, and I do not deny that. But nevertheless, it's very important. We had a max scalar because of an audit report. I do want to make sure that we don't overlook something and after be blamed. It's in my conscience, and I don't want that to be in my conscience. So could we, in another way, ask if the commissioner can override our position as a committee? Because I think that would be maybe the best position for all of us to be. Thank you.
Well, so I think where we are, Cecile, is that what we'll be doing is going for the delegated route. So in that sense, I will actually approve the accounts, and Barry will sign the rep letter. So I think that's the route we'll be going. I'm content that I have done sufficient work on these accounts, and I take reliance from our colleagues from E&Y in terms of the real detail that they've got. I'm an accountant, but I wouldn't pretend to understand all of these detailed accounts myself. However, I am quite confident that by the time we get to close of play tomorrow, provided that we've resolved the PFI issue, then I will be in a good position to sign the accounts on behalf of the committee. I don't know whether that helps you or not, but if not, maybe Barry, you might want to add something to that.
I think the lead commissioner wants to come in, Chair.
Chair, thank you. Want to add anything?
Chair, I'm happy to come in. I just noticed that the monitoring officer has asked to answer the question. Perhaps best to take her advice first, but I'm very happy to respond.
Yeah, I didn't see that, but yes, please, monitoring officer, if you could answer. Thank you.
Thank you. My answer was going to be actually what you just said, Councillor Jessup. You can't delegate up, so you can't delegate to the commissioners. You can delegate down. And as you've rightly said, you're an accountant. You will be able to sign the accounts. And Barry would also be able to obviously deal with the accounts. That was going to be my response, which you have dealt with actually, but really just to clarify that you can't delegate up to the commissioners. So that's really out of the question.
Good, that's very helpful. Has that reassured you, Cecile?
I think the commissioner have overpower about everything above us. So because that is in the letter of when they took over. So unfortunately, if they wanted to take all our position, they could have done. What I am very happy to delegate, but I want to exonerate myself. I don't think we are in a position, because if you cannot sign the account and so on, my position, and I think I might ask my colleague, we agree that everybody has worked very hard on the account. It's not a question. It's our position. If we delegate to you, it's on your head only and not, I don't share any responsibility, because I do think I am not in a position. We received the paper on Saturday. I had a lot to read, and it was a lot of little silly mistakes, but nevertheless a mistake. I read the report of Ernst & Young. I didn't feel very comfortable because it's not going to be signed as I wanted to have, a glowing report. So I am not in a comfortable position. So if you are comfortable to take this uncomfortability all by yourself, I am happy with it. That's all what I say.
I think that's the whole point of delegation. That if you delegate it to somebody else, if you like, in the colloquialism, you're off the hook and the responsibility comes to me. I'm happy to take that on behalf of the committee.
If that is the position, I am very happy.
Good. Okay, thank you for that clarification. Have we got any other questions from members of the committee in relation to the auditor's report, specifically in relation to the account? Stephen?
Yeah, could I just ask about the MRP and the legal advice and that's being sought? Have all those bits of information been collected together so that the decision can be made, or are we still waiting for extra legal advice?
I think that's one for you, Barry, please.
I think from the council's perspective, Chair, we've clarified our legal advice and sent it on to EY for their response to that. And I'm sorry to sort of pass this across back to Debbie and Janet, but we're waiting for their response to that advice.
So just for clarification, Barry, in terms of process, I think the way this will work is once the auditors say, yes, we're happy, then you will implement a whole process of decisions within the council that actually formalises the decision. Is that correct?
Not quite, Chair, in that based on the QC's advice that we've had, we've actually implemented that decision in line with the Constitution. So that decision to retrospectively change the MRP policy has been made and has been implemented in the accounts that you see before you now.
Perfect. I didn't quite know whether the council prepared on the basis that is the decision that you would take, but you've taken it already, and you will do whatever is necessary in terms of publicising that decision. Perfect. Any other questions to the auditors on the accounts? Yes, Cecile?
Sorry, Bob was before me.
Okay, Bob?
Thank you, Chair. Yeah, I just wanted to make you aware that I was involved in the decision that Barry's just spoken about. I was consulted on it as leader of the opposition. So I just wanted to make you aware of that.
Thank you. I wasn't aware of that. That's helpful. Cecile?
Yes, so we have heard from Barry about the little issues that we haven't resolved. Now, in the scale of the non-resolution, what do you think is the risk? And that I ask Esther Young, please. Do you think it will be a major impact or a minor impact on the unitary? Thank you.
So just to close out the point on legal advice. So we have also received our legal advice, and therefore, as Barry says, the decision is now with us. And as Debbie mentioned earlier, until we've been through that process of considering it and going through an internal consultation, it would be premature of us to conclude on that. If we are comfortable with the legal advice that the council has had, then we will be able to complete our consultation and sign our opinion. If we are uncomfortable with the decision to change the MRP policy, then the impact, I believe, is qualitatively material on 17-18 and 18-19. So on 18-19, it has a direct impact on the CIS bottom line. And that is the significance of it. So although it's, I think I'm right in saying a couple of million, obviously the council has already reported its outturn position for 18-19 and would like to stay at that position. The materiality increases then for 19-20 and 2021 because there's a more significant impact on the costs that the organisation will then have to account for in 19-20 and 2021. And therefore that is the more financially significant impact. And obviously then it goes on into the new organisations and they would need to consider whether they wanted to change the MRP policy.
So can I come back, please? So basically, if your position is right, the consequence for us is like compound interest is going to be quite substantial for the unitary. Because if it's a position, it's the way you calculate the MRP. I am not a professional, but so I cannot, so somebody is right, somebody is wrong. So we have a right way to calculate or not. So now, if you are right, the impact will be quite serious for our unitary. Is that right?
So the impact could be, however, a decision could be made by the unitary to change the MRP policy back to lessen the impact and therefore manage that impact back down. And in fact, as Barry has said, the decision that the organisation has taken to retrospectively change that policy to reflect the error that we've identified takes that impact away for 19-20 and 2021. And so actually it never gets to the unitary. I would, Cecile, just pick up the point that actually this is a debate not as to one party is right and the other party is wrong. What we're trying to work towards is a common understanding that we're both comfortable that the approach that Barry has now proposed is appropriate. So it's not that we're insisting that he's wrong. We're actually trying to work through the various elements of the judgment to get to an agreed position.
Tony, you wanted to make a point?
Thank you, Chair. I just, if I can make the point, I mean, I think everyone naturally and quite reasonably wants to make sure that 2 new unitaries are launched in the best possible circumstances. However, it is this committee's responsibility to serve the interests of Northamptonshire County Council for as long as it exists. And you must make your decision in the interests of the County Council.
Thank you. Right, if there are no other questions on that part of the auditor's report, I suggest we move on. Janitor, I don't know whether you want to add further information in relation to value for money, but shall we move to that topic now, please?
Yes, certainly we can do. So the work that we had undertaken on the value for money arrangements is set out in section 5 of the report. And as I said earlier, it looks at the arrangements in place for the organisation during the year 2018-19. And so whilst we're sitting in 2021 and can see significant improvement to a number of issues that were identified at the start of 2018-19, clearly we have had to go back and have a look at what the key risks were at that point, look at the arrangements, look at what work was being done during that year, and then reflect on that. And as I said earlier, there were a number of different risk areas that we had identified in our planning, including financial resilience, the children's services situation, the CQC local system review, and risk management. And we had also identified preparations for local government reorganisation at that point. Having done some significant work to understand what improvements were in place, what arrangements were in place, we did conclude at the conclusion of that work that we were unable to satisfy ourselves that those arrangements were in place during the year satisfactorily, and therefore plan to issue an adverse VFM conclusion.
So any questions from the committee for auditors on that particular subject? Cecile?
Well, I think we have to accept their position and move on. I mean, it's not what we want, and hopefully, but we have to accept the position of Ernst & Young. Thank you.
Yeah, I think, as Ernst & Young have said, it was the position at the time, and certainly when I looked at the paragraphs around risk review, my initial reaction was, well, we've done a lot of work and where have we got? Actually, of course, they're referring to that specific period, and their comments that they make at the time were very appropriate. So yes, as you say, I think we accept this and we move on. And no doubt the later value for money reports will have a different complexion. Good. Janet, is there anything else that you wanted to talk about on other sections of your report? Sometimes you'd like to comment on independence and things like that.
So I was just going to say, Bill, so we have set out, as I mentioned earlier, a fairly significant number of control weaknesses that we identified and recommendations to improve those in section 7. And obviously those need to be handed on as appropriate to the new organisation. And then on section 8, where we deal with our independence, and clearly it's important that we have assessed our independence throughout our work and can confirm to the committee that we remain independent of the organisation. And therefore it's appropriate that we can provide an independent opinion on your financial statements. And obviously page 63, which deals with our proposed fee, will be of interest to the audit committee. And we have been, we've provided a detailed breakdown of that to Barry, and obviously we'll need to continue that conversation with Barry as to the appropriateness of that. And then clearly it's subject to approval and also PSAA approval, as they are responsible for determining the overall fee.
Thank you. Stephen, you've got a question?
Just a question on the fee. Would there be any other penalties from central government or anything for the late submission of these accounts? Or are we just in for the audit fee?
It's maybe one for Barry to answer, I think.
There are no penalties associated with the late submission, Chair. Obviously, if there is a situation that if we don't get this over the line by 31st of March, and it does go into the West End, potentially there is an increased audit fee, because clearly we'll have to do some more work on going concern and whatever else. So if we can get the account signed off by 31st, it's a static amount, I would say. But if there's further work to be done and we can't do that, then clearly there's potential for increasing that fee.
Yeah, indeed. Cecilia, you've got a question?
Yes. So in order to sign off, you have to resolve the question of the MRP. Is I am right or not? What happens if you do not resolve it? Because that is an issue, and Barry just replied that we will be there may be penalty. So what are the probability for you have one more day, or not even a day? The longer we have the meeting, the less time you have. So maybe we should stop the meeting now.
So I think we've actually addressed part of your question earlier on. I mean, obviously, if we're unable to resolve it, then the ball gets bounced to the west, and we know there are, as Barry's pointed out,
yes, exactly. But the most important and to say, we all know in the difficult position we were, and I have no doubt that our officers have worked very hard. But now we are in the position we are, and it's uncomfortable for all of us. Now, what is the most important is, because we say that the other years were better, and thank God for that. What is very important, in my opinion, is that all the recommendations that EY put on the report are followed, and we don't lose that. I know Tony McArdle said that we have there to be NCC, but we cannot lose those recommendations to move forward, and we should accept them. So that is my position. I don't know about the committee or about you, Chairman. Thank you.
I'm sure that's absolutely right. In terms of probability of resolving the MRP issue, that's the critical point on that is E&Y getting into a position where they can say they concur. I'm sure if we asked them, they very politely say that they couldn't tell us what the probability of that was at all. So I'm not even going to ask them.
Well, what I can say to put Cecile's mind at rest is that whilst Debbie and I are here, we have a whole team working on this in the meantime. So rest assured, it hasn't just been put down and we'll pick it up later. It's ongoing at the moment.
Thank you. So any more questions for the auditors in relation to their reports? No? Okay, so I think, is everybody content to note the auditor's report? Good, thank you very much. So now let's move on to the next part of the agenda. And as I said, I'm going to take items 9 and 7 together because they're related. So we've got Barry's report, we've got the draft of the accounts, and we've also got the management representation letter to see. And in relation to the point on recommendations going forward, of course, in Barry's report, we've also got the responses that management have given. Just a minute. Management have given to.
Yeah, there is a question from Councillor Irving Swift.
Yeah, I'm going to get to that in a minute.
Oh, sorry.
Just introducing the item, please.
Sorry, I just wanted to.
Yeah, no, I spotted it. So that's what we're going to discuss now, and I'll invite Barry to just talk through his report in a minute, but I'm happy to take Cecile's questions now.
Yes, Chairman, I think we should do a bit more than noting the report. Because noting the report is quite ambivalent. We note the report, and because you will have, it's more than noting the report, you will have to do a bit more. So I think noting the report is maybe not the right term. I would like to have advice from the legal brain, because I think it's more than noted the report. Noting the report look a bit cavalier, in my opinion. Thank you.
Well, we can certainly ask the monitoring officer. I think noting the report has some sort of significance. Maybe you could explain for us what noting a report means.
Noting a report means that the report has been brought to the committee to look at what's been said. If you have questions, you can ask those questions. If you need to seek clarification, you can seek clarification. If there's something you're not happy with, you can raise those issues. But it's not a report seeking your approval or your authorization. It's more you noting what's going on. I don't know if that makes sense. So that's what noting the report.
I'm sure, as Cecile, the minutes will reflect the discussion here, which you know has been quite comprehensive. Mm-hmm. And also, I'm sure it record the fact that you know, while this is a report on a particular year, we would hope that our successors take on the points in the audit. And of course, our audit colleagues, I understand, will be auditors of the new unitary. So that is probably the best way in which these matters will get passed on to the new unitaries.
Yes, Chairman, I quite agree. But because we will not, you will have to sign the minute. We will not be there anymore. We will have gone already in the unitary. We have just one more day. So the minutes have to be approved by you. So if it's something inaccurate, we just say not the report and it's lost. So that's all. I think we have to be a bit more careful because we cannot, you cannot ask us if we agree with the minutes because we have no time for that. So it just, we know the report, and due to the date of the committee, I would like to have, we know the report, and that we are not, how to put it, it put us in an uncomfortable position. I cannot say more, without, but I think noted the report, and our monitoring officer said it, it's just noting the report, but we are in a position that if something is not noted on the minutes, we have no record to it. So that's all what I want to say.
Okay. Actually, I think as far as the auditor's report is concerned, that was probably at the time that we would have expected to receive that. I think the more material point that you could make in the item that we're about to discuss, and we can certainly minute it there, that the work of the committee was certainly made challenging over the weekend by the late arrival of the package for reasons that we perfectly well understand. And I think if we minute that, that probably deal with your point. Monitoring Officer, you want to make a point for us, please?
Yes, I just wanted to assure Councillor Swift that at the last council meeting, as the monitoring officer, I was given delegated authority to sign off minutes of meetings. And before that's done, it'll be circulated to all the members. So just to assure you, the minutes of this meeting that we're having will be circulated. But I have delegated authority with Councillor Jessop to sign the final minutes off. So you will have an opportunity to look at the minutes before they're signed off. I hope that provides you with further assurance.
Good. Okay, let's
sorry, how can we sign? Because you will send us to our new address, because NCC doesn't exist anymore.
Yes, that'll be the case. Your up-to-date email addresses. I can send you an email outside of the committee.
I'm sure she'd be prepared to bring it around to your house if necessary. Barry, would you like to introduce your report, please?
Thank you, Chair. As the Chair has said, this is two items, the letter of representation and the statement of accounts. The letter of representation is my assurance to EY, as Section 151 officer, on a number of issues in relation to accounts. It's my letter to sign, and it is an integral part of the accounts process. There is a typo in the letter which we've picked up under going concern. So the copy that you've got says that functions and services of North Hampshire County Council will be transferred to West North Hampshire. It will be transferred to West and North Hampshire. So on the copy that I've got to sign, that would be both West and North Hampshire. In terms of the accounts themselves, I think we've all recognised the work that's been put into this by the relevant teams. I know Debbie and Jean are on the meeting, but they have worked their socks off, weekend working and late nights, and also recognising the effort that colleagues at EY have put into this as well. I know everyone was working over the weekend, and especially late into the night, to get these accounts presented to Audit Committee. I think the positives coming from it, as Janet and Debbie have said, we've got an unqualified set of accounts. I think, given the circumstances, we were always expecting an adverse value for money opinion, but I think, as we've said, there is positive direction of travel on that. So in terms of the accounts themselves, I would ask Debbie to start, but Jean also to come in as well to give an overview of what's in these accounts and what the highlights are. So I'll hand over to Debbie.
Thank you, Barry, and through you, Chair. Before I just move on to the statement itself, I think it's also appropriate just to point out to members that at Appendix C is the formal management response to the auditor's recommendations in relation to the control environment. And whilst many of the recommendations have already been acted upon during the course of the audit to improve controls, procedures and data, there are also a number of items that we will be formally highlighting for consideration by management within West Northamptonshire Council and North Northamptonshire Council. So that is the continuation of the items which Audit Committee have just been asked to note in the previous item. So there is a proactive action there for us to make sure that those recommendations are implemented in due course. In relation to the statements themselves, as we've alluded to several times during the course of the meeting, there are actually substantial teams sitting behind both EY and Jean and I who are on this meeting today, and they are still actively working on ticking and checking the notes and disclosures to the core statements. I think we're satisfied that the core statements are correct. We have identified some minor rounding errors which are par for the course in relation to such a complex document. The most significant adjustment, I think our colleagues in EY have already referred to, which is the revision to the cash flow statement, which has been shared with EY over the weekend and is now subject to their review. We've also updated the narrative statement within the Appendix B document. The narrative statement primarily sets out the position that has been reported to the Council's Cabinet at the 18-19 revenue and capital outturn position at the time. And clearly some of those numbers will need to be adjusted as a result of the audit. And I'll go on to just explain what they are in a moment. And Jean will expand upon those when she takes us through the key movements in the statements as a result of the audit. I think it's important to just bring to members' attention, just turning to the statements of accounts in Appendix B, it's important to note that the core statements are reported in accordance with the CITFA Code and International Financial Reporting Standards, and therefore they're prepared on a different basis, i.e. an accounting basis, to the format that members are usually used to seeing when they consider budget setting, monitoring and the year-end outturn on both the general fund and capital. Those reports focus upon the funding basis and are expressed in terms of the impact upon local taxation, i.e. the council tax. So in the narrative statement set out at table 2 on page 13 of the statement, the general fund revenue outturn was originally reported to have achieved a £4.46 million surplus in 18-19. As a result of the audit adjustments, this surplus is reduced by £3.1 million to £1.4 million. The updated table will allocate those adjustments to the relevant directorate lines compared to what's presented in the papers that were issued to the committee over the weekend. The general fund outturn reported on table 2 at page 13 essentially presents the management accounting position of the organisation on the funding basis that I've just referred to. In contrast, and this is I think the important point that quite often gets confusing for the reader of the document, is that the consolidated income and expenditure account, which sits at page 31, is actually reported on the basis of international financial reporting standards and reports a deficit of £71.2 million. This is after taking account of costs such as depreciation, profit and loss on the disposal of assets, and the difference between the actuarial valuation and cash transactions on the pension fund. There is a statement within the document at note 17 which sets out how that accounting basis reconciles to the funding basis that members are more familiar with seeing. So I just thought I would bring to your attention those differences, because it is quite difficult sometimes to contemplate how we can be reporting a surplus on our general fund outturn at the same time as reporting a deficit on the comprehensive income and expenditure account. We've also referred within the meeting today about the revised policy in relation to MRP. And the reasons for that are set out in 7.9 to 7.12 of this report. The accounts, as Barry has already said, are presented on the basis of the policy decision having been applied. Jean will now take us through the main adjustments to that comprehensive income and expenditure account and the balance sheet, and we'll come back and highlight for members which of those adjustments actually do impact upon the general fund and therefore the general fund balance position at the year end.
Thank you, Debbie, and through the chair then. If I can refer you to table 1 in Appendix A first of all, that shows you what we've changed on the comprehensive income and expenditure account as a result of the audit. And I'd highlight to you some fairly large figures in the adjustments column at the top, where we had to adjust for internal income that hadn't been properly netted off against the related expenditure before. Then there were a number of amendments in there related to fixed asset charges and an adjustment for a historic issue to do with a debtor for VAT. At this point, the actual MRP changes don't particularly come in at this point because they are actually an adjustment that happen on a statutory basis sooner than on an accounting basis. And then if we proceed through to table 2 within the Appendix A, you'll see the changes that have been made to the accounts, to the balance sheet. The biggest figure in that is the adjustment we have had to make to properly recognise One Angel Square as a finance lease. That entry had been omitted from the original draft accounts. There's a number of reclassifications of balances between classes of assets and liabilities through the balance sheet. We had a school that we had to add in that had been omitted from the balances through some very peculiar, unusual sets of circumstance, whereby the asset had come into the ownership of the council unexpectedly. There was more to do with the evaluation of assets here, and we have the amendment for the PFI liability showing here. Then if I can refer you back to the main report and to table 1 in that report, which was on page 7 of the report, that takes you from the initial reported general fund balance of 20 million in the draft accounts through to the 16.9 million we are now reporting, and explains that 3.1 million movement that we've referred to, how that actually changes. Hopefully most of the items there are we've already mentioned or have been discussed elsewhere earlier on during the meeting, but that's where you can see the impact of the change to the minimum revenue provision, which, as I said, is a statutory adjustment and doesn't appear in the comprehensive income and expenditure account. That adjustment happens in the movement in reserves statement. I'm happy to take any detailed questions on the accounts.
Barry, anything else you want to add?
Not at this point, Chair. I'll wait and see what the questions are.
So just before I open it to discussion, obviously, when we're reviewing this, we need to look at the management commentary and the core statements, but we've got a very thick document with a lot of notes. The ones that, to me, seem the most important for us to have thought about, which certainly I have, are the notes around page 22, 23, which are the key accounting decisions, and 3 of them are specifically referred to. The paragraphs around page 37 to deal with going concern. Around page 52, it's the accounting policies, which, as I understand it, with the exception of the minimum revenue provision, are all consistent with prior years. Page 57 describes some critical judgments that management have made These are sort of generic judgments that they take every year, but I'm informed that there are no significant judgments that they've made in relation to legal claims this year. Page 61, the events after the balance sheet date note is important, as is page 62, the prior period adjustments paragraphs. And finally, in the body of the accounts, the one that's always catches my attention is around page 103, which is the contingent liabilities and the contingent asset notes. And in terms of Barry's rep letter, obviously every paragraph is important, but I'd probably draw your attention particularly to A5, which is the explanation of why we haven't dealt with the unadjusted differences, and we covered that with the auditors. D2 and D3 gives us comfort because Barry's confirming he's made full disclosure of all litigation. E1 is the subsequent events, G is the going concern, and J is a specific representation that auditors have asked for in relation to grant income. Right, so questions on the accounts, please. So Cecile, you have your hand up first, so you can go first.
Yes, sorry, as I said, I am not an accountant, and I try to make sense of a document that is quite substantial. But just, I will take one example, and please bear with me. It's page 19, and we are page 16 and page 19 on the Appendix B. And we have, it's about the release of sleep provision. So what I don't understand is the release of sleep provision set in two things, in corporate and in adult social care. Now, do we had, because in my recollection, we didn't put 5.8 million aside for reserve. But when I read, and that is an example why it's so complicated for us to digest so quickly. But if I read the summary, and maybe I am completely wrong, and you will put my mind at rest, the corporate services, you have a reserve of 3.8 million that was released in respect of sleep allowance. And you have another 2 million on the NAS of the same reserve for the same problem. And I thought it would sit on one or the other, but not both. So is that right, or it was just an accounting? And I have a lot of questions, but it's not, we are not here to nitpick. It's not my position, but it's for that, for me to have the documents so late, made me very uncomfortable. Thank you.
So I'm not sure I picked up the specific reference there, Cecile. Do you say page?
So can I come back again? So I will try to be a bit more concise. We have a provision for sleeping arrangement. And that was because at one point there was a lawsuit against to see if when you had on adult social care, you had to pay the carer when the patient was sleeping. And it was a court case, and we put some reserve in case of it will go against the council. And we put 2 million or 3 million pounds in adult social care, which said in that report, page 16, we put 2 million because the judgment says we don't need to do that. We release the reserve, rightly so, but we relieve another reserve of 3.8 million in corporate services of the same problem. So my question is that normal, or do we double counted the reserve? That because, you know, on top of that, I learned accountancy in France. So I am not, so for me, despite having some accountancy fluency, I am much more on the French way of doing things than on the English way, but that is the way I read it. So maybe I am wrong in reading it that way. I'm sure Barry and Jane and Debbie will be able to put me right. Thank you.
I'll just let Barry respond in a minute, but I might just note that I'm very pleased you didn't learn your accounting in Italy. Barry.
I think, Chair, these are direct lifts from Cabinet reports on both financial and performance data, which are in the narrative statement rather than the accounts themselves. So what I can guarantee is that reserve has not been released twice, because obviously we've checked that through the out-of-term position, and our internal and external auditors have looked at that position as well. So this relates to 1819 regular monitoring reports, and that report was presented to Cabinet in those regular monitoring reports. As far as I recollect, that there were two provisions, one at the corporate level for an overall sleep-in provision, and one particular provision for adult social care in particular, and both were released in 1819 into the regular monitoring position.
Well, I have to say your recollection is extremely good, as you weren't here at the time, so I'm reasonably impressed. Any other questions?
Could I just ask a question, Chairman?
Yep.
It's a sort of more of a general sort of thing, really. You know, studying the accounts and that, there seems to me to be sort of two major groups of things, and not going into particular transactions in detail, but some of them are sort of ordinary accounting errors, errors of omission and all that sort of thing, which you would expect. But there seems to be a sort of underlying current of some quite big policy decision driven errors. And I'm really interested to know whether those errors were due to a sort of lack of financial grasp by the managers, the directors of the organisation, or whether it was just purely a simple question that the finance department wasn't really up to doing the job that it was being paid to do.
So I suppose I would see, you know, maybe three groups of those things, Stephen, just to help out a little bit. One is obviously the accounting treatment of one Angel Square. One is the PFI calculations. And I guess the third one, which sort of strikes you as you go through, is the issue around property, plant and equipment and valuations seem to be a kind of fairly common theme of adjustments that came through this process. So Barry, would you have any comments to make on those three in particular?
I think you know, if we cast our mind back to the time that we're looking at, which is 2018-19, and we keep finding ourselves in the present, but what we're talking about here is essentially 3 years ago, 2 years ago. It's that this was a very uncertain time for the council. And if you recollect, all of our services were in LGSS at the time, which we've now repatriated back to the council. I think some of those errors and omissions in hindsight shouldn't, especially the treatment of the lease on 1 Angel Square, should not have happened. And as a service, we should hold a hand up and say, but we got that wrong. However, I've said this before at Audit Committee, that this particular set of accounts and this audit has been a perfect storm of events. So we had the financial crisis and also the decision to change financial systems from Oracle to ERP Gold at the same time as well, which I think has added to the confusion over some of the items. And obviously we've changed our audit there as well at the same time. So it's sort of a perfect confluence of a lot of factors kicking into this. But certainly I personally wouldn't expect these type of errors to be repeated again as we move forward.
Any other questions, Cecile? Your yellow hand's still up, so I guess you've got one.
Yeah, no, it's just what Barry just said. We should note, because Barry has worked very hard, and he said they got it wrong, and that is what is very important. And when we are in the position we are, is that at last we have in a position that we say we got it wrong, we have to move on. And I think that is very, very important, because that would help the healing process. And I think I commend Barry for being so honest with us. And Angel Square, who has caused a lot of headache. In fact, it's the first time that somebody admit that they got it wrong. And I would like to thank Barry for his openness with us. Thank you.
I'm smiling because I think actually Barry admitted that somebody else got it wrong, but any other questions in relation to this very complex document? No? Good. So I think we can move to now look at the resolution that we're asked to approve. Now, just for clarity, I think it's all agreed that we should go for the delegated route, so that delegates authority to Barry to sign the letter and for me to sign the accounts on behalf of the committee, but also that it does deal with the matters that might happen in the event that we're not able to get things over the line by close of play tomorrow night. So I don't really want to read the whole thing out again, but I think probably we should just go around members of the committee to make sure that you are completely happy with the resolution that we've got in front of us. So, Cecilia.
Sorry, Chair, before we go to can I just, in terms of getting the minutes right on this, you have before you a number of recommendations. Number one is to note and consider the external audit findings. But number two is an either or. Yeah. And what we're recommending is the all. Absolutely. But that all should be numbered C and D rather than A and B. So what we're agreeing is that 2C and 2D, which then lines up with recommendation 3, are agreed by the committee. Yeah,
I mean, just for clarity, I read this as a sort of an either or, actually. Maybe the monitor officer can just clarify this. So in other words, what the minutes would actually say is for 2, it would say that the audit committee, subject to the auditor's position as set out in the audit results reported elsewhere on this agenda, delegates authority to the executive director. So in other words, the first A and B wouldn't exist in the resolution. I've lost
so sorry, are we on that document?
Agenda item number 9 covering.
No, number 9, and it starts recommendations that the audit committee note and considers it.
Yeah.
So what we're just trying to be absolutely clear on for the purpose of the minutes is what the wording of resolution 2 will be. Sorry, you moved over there. Would you just like to clarify? Probably you're the best person to say how you would suggest this resolution is worded.
Sorry, if you just go, I've just lost the document this minute. Apologies, it's just,
don't worry.
I come to sort of, I don't know where it just went.
We were like this all over the weekend.
Yeah.
I made my point.
Can you just give me a few seconds? Let me find, I don't, it's just gone off. I'm not sure it's.
Chair.
Where is it?
Chair, I mean, I'd have thought that you keep item 1, item 2, item 2B, 3, taking out the 2A, 2B and 2C.
Well, I think on the version that was circulated, I think we're all content with 1, 3 and 4. So we're just discussing what the form of resolution 2 should be. Yeah. At the minute, it's structured as an either or because obviously we didn't know what we were going to be doing. Yeah. I think where I'm trying to get us to is a resolution which is the resolution which delegates the authority. So in other words, it makes clear that the committee hasn't approved the accounts. Otherwise, it could be regarded as a bit ambiguous when somebody looks back at this at some point in the future. So, so my recommendation, subject to the monitoring officer, is that it has the introduction 2 and a bit lines, and then it goes to the second A and B that starts with delegates. But what do you think?
Yeah, thank you. Sophia has just kindly sent a copy to me. It would, yes, I agree with you, because 2A and B, which says approves the letter of representation and approves the final 2018-19, that can't be applicable now. Mm-hmm. So yes, you are correct. It goes to 2 A and B, the second A and B, which is delegates authority to the Executive Director of Finance to approve and sign and delegates authority to the Executive Director. So the first A and B would need to be deleted, and then the second set of A and B will be left on the report.
Perfect. So I think we've got clarity. it's the delegation route, not the committee doing any sort of approval. Perfect. So with let's just go around and make sure people are content with that. Cecile, are you happy with that?
Well, I think we are viewing it in a very odd way. I think we should have 1. The 3 should become 2, because that is very important. If you cannot sign, we are stuck. And because that is the issue. At the moment, we don't know if we sign or not. So what is important is we have clarity as the audit committee, we do our job, because if you cannot sign, that is the most, if we cannot have closure, that is at the most of impact for us. And the second should become the 3. And if everything is okay, that is what we do. And we give you all delegated power. So I would put 1, 3, and 2.
I'm sorry, Cecile, it actually doesn't work that way. So what happens is, 1, we're all content with. Number 2, the committee delegates to Barry and myself to sign by tomorrow. If we're not able to do that, then number 3 comes into play. In other words, number 3 is the thing that comes after 2. You confirm that, monitoring officer?
Yes, so, sorry. Yes, which is what I've said earlier, it's the 2A and B.
Okay.
Bill, can I just say that if you look at the number 3, it does say either recommendation 2A and B or 2C and D. So I think the letters on the second part should be, rather than A and B, should be C and D.
Okay, it's somewhat confusing. You're quite right. That is in the middle, and Cecile, that would be, presumably have been your point.
That was my point also, Chair.
Yeah, okay. Right, so we just need to, I'm going to just drop this on the monitoring officer. The problem that we have in 2 is we want to be quite clear that the committee is going the delegation route.
Yeah.
Could you just advise us how we should look at this resolution, because it's an important position for.
Can I step in, Chair?
Yeah,
if you wouldn't mind. Not I want to do Edwina's job for it.
Probably more.
Okay, we're accepting number 1. I don't think there's a problem with that. What we're saying is that the all recommendations, i.e. the second of the 2 recommendations for number 2 are being agreed. Number 3, I think, should then read that the Audit Committee agree that in the event of all outstanding matters cannot be resolved, David, to enable signing of the 2009 statement account and letter of representation by March 2031, that those matters should be agreed to, should refer to Section 151 of the Audit Committee for West. So I think we need to delete the bits that refer to recommendations, because actually we've made the recommendation.
Yeah. Okay. So Barry, just to be clear, what you're saying is we go 1. We go the first introduction lines on 2.
Yeah.
Delete the next 2 paragraphs A and B, but insert the next 2 paragraphs A and B dealing with delegation.
Yeah.
In paragraph 3, we delete the references to 2A, 2B, 2C, 2D.
So what we delete is as set out in either recommendation 2A, 2B, or 2C and 2D above. We delete that sentence entirely. Perfect. And then the whole thing makes sense.
Perfect. I think I've got my head around that with your assistance.
Yeah.
Right. Cecile, are you content now?
Yes, sometimes being French, I start to doubt that I understand your English. But because I did a business school, I did also law. And in law, you have to be clear, because otherwise you have a problem. So now, I think it would be good if somebody read exactly what we are going to agree to the letter. So like that, we have no, and I think Barry made a very good point, but because we all have been, so can we read the recommendation in full so we have no problem in the future? Thank you.
Because I love your wonderful tones from the northeast of England. Would you just kindly read out what you said before in relation to 2 and 3, because I think we're all content with 1 and 4.
Okay, so on number 2, the recommendation is that the Audit Committee, subject to Auditor's position as set out in the Audit Results Report elsewhere in this agenda, Delegates authority of the Executive Director of Finance to approve and sign a letter of representation on behalf of the County Council at Appendix D, as revised by a resolution of a standing item set out in the audit results report, and delegates authority to the Executive Director of Finance and the Chair of Audit Committee on or before the 31st of March 2021 to approve and sign the final statements of accounts for the County Council at Appendix B, as revised by a resolution of the outstanding items set out in the audit results report. Recommendation 3 now reads that the Audit Committee agree that in the event that all outstanding matters cannot be resolved to enable signing of the 2018-19 Statement of Accounts and the Letter of Representation by 31st of March 2021, that those matters shall be referred to the Section 151 Officer and Audit Committee of the new West Northamptonshire Council for consideration at the earliest practical date of the 1st of April 2021.
Good, thank you for that. So, Cecile, you happy? Bob?
Yes, I'm happy with that, Chair.
Thank you. Bill?
Yeah, I'm fine.
And Stephen?
Yes, I think that's all right. Yes, I just wanted it to sort of be clear that the committee had decided that it wants to resolve these matters, delegate the authority and get the thing done, and not to leave it unfinished and just left for West Northants to sort out at a later stage. I think this just about does that, not brilliantly well, but I'm reasonably happy with it, yeah.
Good. Cecily, you want one final point?
I would like just a clarification, because if it's not signed, we have the audit committee of the West Northamptonshire, but I think at the moment we don't know who are the members, and we don't have a definition of what is the audit committee. So
I think Councillor Irving's fifth, we'd be looking to do that after the elections and the revised governance and membership around that. It wouldn't be immediate. It would be
well, but that
it would have to be around about June time.
Yes, but they said at the earliest practical date after April 21. So no, it's at the earliest applicable date after the election.
Well, the election technically is after the 1st of March. So the
election is on the 6th of May.
Yes, exactly.
I think the recommendation stands, Councillor. As the Commissioner has said, that's for the new authority to sort out. I think the Audit Committee will have fulfilled its responsibilities by asking West Northamptonshire to look at this as soon as practically possible at the 1st of April. And, we can't tread into their governance and business.
Okay.
I mean, to be honest, we have no ability to manage what happens next. If it goes over to the West, it wouldn't surprise me if there was a delay of several months for the reasons that you allude to. Good, thank you very much indeed. So let's move back to the agenda. And
sorry, Chairman, if everything goes well on the night, that means tonight or tomorrow, could you send us a very quick email so we can be very happy and I can pop the champagne?
Cecile, I promise if it all goes well, I'm going to ring you at 1 minute to midnight tomorrow night. Now, of course, you'll get an email from Barry. Barry will be, I guess, the last guy to put his signature on the paper. Okay, let's move on to the governance letters. So we're familiar with the form of these letters. These are letters which are requested by EY, which really start to dictate how they deal with the audit, because obviously they're interested to know how the audit committee deals with the pension accounts and NCC in general. We've signed these sort of letters before. These bring all the letters up to date up until the end of March 2021. It's Barry's report. Do you want to add anything to that, Barry?
Not at the moment, Chair. I think the report stands for itself.
Has anybody got any comment on the letters or anything that they want to draw to the committee's attention, or are you all happy that I sign these on behalf of the committee?
I'm happy you signed them.
Okay. Thank you very much. So that then gets us to the pension scheme accounts, item 10. Now I'm expecting people to start dropping off the call like flies as we move into the pension scheme accounts. But Barry, do you want to just introduce this?
It's the most exciting paper you've got, Mr. Chairman.
It certainly is. Barry, do you want to just introduce this item to your report? But I imagine you will then bounce it on to EY to deal with their report first.
In the normal scheme of things, the pension fund accounts would be the complicated bit, and the council's accounts would be the easy bit. But we seem to have switched positions here at Northamptonshire. I think, again, well done to the team in pensions, Fiona and the team for getting this over the line in the timescales that are allotted. And that's as much as about I'll say at the moment, Chair. The pension fund accounts, much like the council's accounts, they're fairly complicated and complex. But I'll hand over for further comment.
So Debbie, I think you said one of your colleagues was going to take this item for you.
Correct, yeah. Robert Garnett, who's actually the manager for the pension fund, is going to take you through this item. So we're delegating to Robert very effectively.
Okay, Robert, off you go. Oh, Cecily, you got a question before we start?
Yes, at the previous meeting, we were told that it was not in our remit at the audit committee. We just noted because the pension committee has already done something. So as far as I'm concerned, I did have a very curt view of the account. I don't think for us, for that report, we just should note it because in December, the pension put me in a spin, and rightly so. You say it's not our role at the audit committee. We just note the report. So is that necessary for somebody to explain to us the report, because we should not have anything to say about it, except if it's impact on bigger things that I'm not aware. But for me, it's not part of my remit. I have never been trained on pension, and I want to put that on record. And I have never even the pension is even more complicated than what we have been dealing before. So I don't want to get into something in hot water for saying something I should not say.
So just to be clear, the pension committee has no role in relation to the management of the pension scheme. What we do have, and it's dealt with in the recommendation, is we are required to approve the accounts, and we're required to view the findings of the external audit document. So that is the limit of our activities this afternoon. And to be clear, the results of the pension itself, the pension scheme, are down to the pension committee. Sorry, Robert, off you go.
Great, thank you, Chair. So I'm going to talk the committee through the 1920 audit results report for Northamptonshire Pension Fund, which is agenda item 10 in your packs, Appendix 3. And just to be clear, this is for the year end 31st of March 2020. I'd like to draw the committee's attention to the executive summary of the report, which is pages 5 through to 8. And happy to take questions at the end of my piece. So starting on page 5 of the executive summary, this report follows our audit plan report, which went to the November audit committee. We've conducted our audit in accordance to the plan that went to that committee. To date, we have substantially completed the pension fund audit. And by that, I mean we've completed the field work of the audit, subject to the completion of the points listed on page 5 of the report. So we expect to issue an unqualified opinion on the pension fund's financial statements for the year end 31st of March 2020. As listed in the points on that page, we're unable to complete the points listed until the 1920 County Council audit is near completion. In particular, this relates to the procedures that we perform and consultation processes relating to the pension fund's going concern and post-balance sheet event disclosures. There are procedures on those areas which need to be revisited when the pension fund 1920 accounts are near to signing, which is based on the time frame for when the 1920 County Council accounts are near to signing. Over the page, on page 6 of the report, we have summarised the audit differences arising from the audit. Just to summarise, there are two differences that arising, which management have agreed to amend for in the financial statements. The first one related to the valuation of level 3 investments at the end of March 2020. This had been identified as a significant risk for the audit, especially this year, given the heightened risk due to market volatility caused by COVID in the lead up to March 31st, 2020. As part of the audit, we identified a 5.4 million overstatement on level 3 investment asset valuations. These assets are based on estimates, and there's often a time lag between the pension fund getting the information on the value of these assets. So when the pension fund produced their draft financial statements, they'd proposed it based on the information they had at the time. However, subsequently during the course of the audit, updated information came to light on these assets, which led to the identifying of that misstatement. Management have agreed to update for this. The other difference that we identified was a disclosure difference where one of the pension fund's investments should have been classified as level 3 rather than level 2. Again, this has been updated for. There were no other significant audit findings from the audit. Over the page, on page 7, we've summarised the key findings and conclusions of each of the significant risk areas and areas of focus of the audit. So I'm not going to go through each of these in detail, as members are welcome to read detail in section 2 of the report. But overall, like I say, we've completed our audit testing for significant risk areas and areas of focus, except for the procedures relating to going concern and events after reporting date disclosures. This is because, as previously mentioned, management will need to update these disclosures at the point of nearing the completion of the 1920 financial statements audit. And again, that's dependent on the completion of the 1920 County Council audit. On page 8, just like to confirm that we did not identify any control deficiencies as part of the audit, and also to reconfirm EY's independence from the pension fund. Finally, I'd like to draw members' attention to pages 30 and 31 of our report, where we set out details of our audit fee in relation to the 1920 pension fund audit. The fee reflects what the additional procedures that we've had to conduct as part of the audit to respond to the increased risks surrounding COVID, and also the significant additional testing we had to conduct as part of the triennial review procedures, which are procedures that we conduct once every 3 years based on the actuary timetable for doing a full valuation of the fund. So to close, I'd just like to thank officers of the pension fund for their support throughout the audit. I think we're in a good place. So happy to take any questions that the committee may have.
Any questions for Robert on this report, which very good report. Stephen?
Could I just ask as a simple question, I think, is the pension audit for a different year than the NCC's financial audit?
Yes, it is, Stephen. Actually, simple questions are always the good ones. We're a bit nearer today's date on the pension scheme. We approved the pension scheme accounts for 18-19, I think probably 3 or 4 months ago. So yeah, this is for the subsequent year, if you like.
Yeah, I guess that just to clarify that the challenge is that we can't actually issue our pension fund, our opinion on the pension fund accounts until we can issue the opinion on the county council accounts, as Robert noted. And the reason for that is that the pension fund accounts form an intrinsic part of the main council's accounts. So our work on the pension fund is quite out of sync with our work on the main audit. So we're trying to do the pension fund in line with normal timetable, but we can't actually conclude our work and issue our audit report until we're in a position to do so for the county. but we're obviously trying to get the work done as quickly as we can so that we can also issue the assurance letters that we need to the other Northamptonshire bodies.
So there's no real necessary connection between the audited pension accounts that we're looking at and what we've been talking about for the last hour or so about the financial accounts.
Yes, that's correct.
That would have been helpful if we'd have known that, yeah.
Yes, you could be fooled, although to be fair, it does say to March 2020. So.
Oh yes, I had worked it out sort of.
Yes.
I just wondered whether it was me. Yeah.
No. We're a bit ahead of the game relative to NCC on the pension scheme, and it's quite appropriate that we can actually approve these and put them to bed today, subject to the point that Debbie's just made on the audit final sign-off being contingent on NCC accounts for the same year being approved at some point in the future.
Yeah. Thank you.
Any questions for the accounts team, Cecile?
Yes, as I said, I'm not competent, but do we also share the pension, NCC pension scheme? Is that also a pension scheme that is shared with the district?
Yes.
So what on the pension scheme, on the audit, do you remember we still have a dispute with a company who wanted to ask us some money back to reintegrate their, I think it's 7 million that they wanted to claw back. Is that resolved or is still pending? I haven't read very much the paper, but that was one of the big items last year of a question.
Through you, Chair, it's unresolved. It's still subject to ongoing litigation.
Is that a question in relation to the borough?
No, it's a different district council. It's not the borough.
Ah, okay. So
I'm treading very carefully, Chair, because I don't want to move us into private session. But
yeah, the point is it's irrelevant because the only reason NCC is relevant is because we're the principal employer on the pension scheme.
That's correct. But we are party to the litigation as well.
Yeah. Okay.
Sorry, I didn't mean to ask a question that could have put us on private session, but I am glad I understood it correctly. So I am maybe, as I said, I know I am, my competency is not very, very good, but I try to remember what I learned through various committees.
Yeah. Any other questions on this item?
Before we move on, I know Fiona's on the call. I'd just like to thank Fiona and her team for the usual sterling job in turning these accounts around. Another great effort and great result from the team in pensions.
Yeah, I totally support that. And I must say, over the past 2 or 3 years, as I've been reading these pension scheme accounts, they have got better every year. And, they are complicated, complex documents. But I think you've given the reader the best fighting chance of actually understanding them. So well done.
Thank you. I'll pass on your feedback to our team.
Thank you. So we've got a resolution in front of us in relation to this particular item. There's a slight error in it because it says that the Audit and Assurance Committee, actually we're just the Audit Committee, but subject to that, are members content to agree with the resolution here?
Agreed.
Good. So we can take that as agreed. We have no urgent business that I'm aware of, so that moves us into the second part of the meeting. So we have some information to deal with here, which on the grounds that if the public were present, it would be likely that exempt information, that's to say information regarded as private for the purposes of the Local Government Act 1972, would be disclosed to them. So I'm going to request the committee to resolve or agree that under section 100A of the Local Government Act 1972, the public be excluded from the meeting for the following items of business on the grounds that if the public were present, it would be likely that exempt information under Part 1 of Schedule 12A to the Act of the descriptions against each item would be disclosed to them. And the 2 items are 2 limited opinion audit reports and an audit review that we've requested in relation to the financial management improvement plan, which from my perspective are ordinary normal course of business, but of course we've got an election pending, so they fall into items that we need to discuss in private. So is the committee happy to proceed on that basis, please?